go ahead.
Okay, good evening, coach. Um, the course has been really, really educating. Yeah, though we have our challenges too. Okay, let me speak personally. Yeah, I do have challenges at intervals, but as I keep watching the recorded search sessions daily, I keep growing, and wow, I must really say I've learned a lot of secrets in trading, psychologically, mentally, and can I say I've been a bit disciplined from your mentorship, from your coaching, and it has been a good journey. It has been a very, very good journey. Yeah,
Thank you.
thank you so much. Yes, you really enlightened my path in trading. Like I was trading like I knew before, but now I can't say I'm trying to unknew the things I knew before. I'm trying to
That,
learn
that
the new
that
things.
that's good. That's beautiful. That's one of the most important thing that a lot of people don't seem to realize. There is a wedge of learning that there's a mountain of learning or information that are garbages. So imagine in your life you store up garbage of information that are not useful to you at the point of experience. And new information are just coming in and they don't have a room. So it's not a problem of I don't know, it's a problem of what you know is stopping new information from coming in. So the best thing that can happen to you at that point in time is not trying to get new information. It's just breaking down the old information. And sometimes you need a purge. Just like you are having a maybe stomach upset or what they call it, then you have to take a purge medicine and it takes care of everything in the tummy. It's painful.
Yes,
It's painful. The process is painful, but the results, it's always appreciating later on.
exactly, sir.
Thank you, George,
Exactly, sir.
for sharing
You're
that.
welcome, sir. You're welcome, sir.
Okay. Who else? Josh came out. I didn't select Josh. Some of you are on probation. On my list of relationship, you're on probation. Number one person on probation right now is Shai. I don't know how, but she's on probation. She's on the number one list of probation. So other people, but I won't mention, but I need to mention her own first because she's high there. CIA kind of. So who else? Because we are coming to a very vital part because this is where a lot of people get excited. You know, me, I've had my own excitement. Now I'm coming to your own excitement where um it's not going to make more sense. Okay, it's not going to make more sense. I don't want to say too much. I just want to hear the experience based on your expectation on the experience. How's it been so far? Short, just short. Maybe short word, man. It's been it's been heartbreaking, oh, Mr. Kenry. You just keep putting us into a situation where we just feel like, man, we didn't know anything. We will never even know anything. That's the feedback. I like it. Okay, so yeah, except you guys are not learning. But I think it's been an amazing experience. Am I correct?
Am I allowed to talk? I should not
Is
talk.
that-
Am I allowed to talk? I should not talk.
if it's going to be short.
Yeah, let me just say, for me, I've just been very patient with myself, honestly. Just being very patient with myself. Just keep
Okay.
following. And what I've
Same.
been learning, um, seeing the analysis and the market so easy, it's just amazing. It's amazing. I'm excited about the future. Let me just say that. I'm
I like that.
excited. I'm excited about the future. It's worth waiting for. Just simply.
Beautiful. Madam Muling, I feel like I want to hear a voice. I'm in the business of hearing voices first before we kick into. So don't buy into my time. It's my time. If you think I'm wasting your time, that's your business. Right about now, it's my time. Okay. I'm in the business right now. I feel like, and I do what I feel most of the time spiritually. Okay. So my spirit is leading me for to hear from you. Okay. There are voices in you right now that needs to be expressed. I just want to hear those voices before I get into your time. So I'm having a feeling like I want to hear from Madam Olin. Then I probably want to hear from a couple of other. That's why I say make it short. We're gonna have an interesting time this week and next week is going to be very interesting. So
Can I say
this is gonna
something?
I'm in my submissive time. So Madam Olin.
Yeah, thank you. Yeah, I've learned quite a lot, really. The market structure, and you emphasize that a trader that is able to define the structure and the price action is a good trader. And the price action tells us what the market is doing, and you should be able to interpret it. And I feel I need more practice on really understanding and mastering it. I'm not there yet, but I'm putting every effort to try and master and understand the structure of the market and the price action and everything that you mentioned. Yeah, I'm still.
Okay. Because I've listened to you, I'm going to help you with something you may not be able to help yourself.
Yeah.
And I don't know if I should say it now. That's why I said I want to listen. That's what my spirit said I should do. So I don't know. Maybe that's why I want to listen. So I want to write something down. Okay, or someone write on the chat and remind me. So you remind me, Madam Olin, that I said I would help you with what it takes to master. Majority of people, they don't understand the concept of mastery. Okay, the whole purpose of learning is mastery, but a lot of people don't understand the concept of mastery. So I'm going to share something on mastery. Just remind me that I said I'm going to share something on mastery. I believe every one of us want to get to a stage where we master what we're learning. Am I correct? So just remind me that I'm going to say something on that.
Well, thank you.
All right. Madam Konyisola, are you in a position you can talk to me? Or you're still you're there? Madam Feli, you want to say something?
Yes, I want to say something. Good evening, everyone. Yeah,
Okay.
I think I've not been attending the live classes, but this week I purposed to listen to the recordings, and I can say that for the first time I found myself so glued on my laptop and writing notes, detailed notes. Have never done this in any class of trading. And even when I went to sleep last night, the market structure was, it's like a software was being downloaded in my brain, because I would wake up and the market structure is still on my mind. It's like it's being downloaded. And I can say this is a game changer, and I don't regret paying for this class. It is a game changer for me.
Thank you.
Grateful. Yeah.
Hearing this from you is very encouraging. So I'll say thank you. Yeah, Madam Esther, you are warming up to talk to me. I can feel it in my spirit. All right, let's go.
Hello, good evening, all. I'm here for a little while from IM, although
Okay.
I didn't join class in IM. So I've had a little bit of market structure before, but this course has been, although I haven't studied the strategy part of it, because I was quite busy on something, but the little I have done from the other courses has broaden my perspective. And what I can say this week, although I didn't take the trades, I took time to plan out trades. And I think 2 of my trades played out using the market structure entry and exit. So it's really had built my confidence, especially the understanding of the higher time frame.
Okay.
So,
Oh,
but
that's nice.
I still find challenges in entry, which I hope to achieve when I watch the strategy video.
Okay, so that's what we're doing. We're hitting strategy main today. Okay, so yeah, we're hitting strategy main today. Everything I've given. Now the thing is, you would in the understanding of it, you will know the strategy. But there is actually a checklist to a strategy. So I'm bringing a checklist. So checklist makes it easier. Okay, but now imagine understanding and the checklist. It's gonna be game changer. So that's what we're doing today. It's very short. It's gonna be very short.
Thank you.
Thank you, Madam Esther. So I mentioned Madam Koninsola. I don't know if she's in a place. I've not heard her voice for a while. She's been absent. So I've heard from some of you. Where's I'm doing check. Where's okay. I think we can start. The rest of you, you would if you're popped up, you're gonna come. But okay. Let me see. Madam Raquel, I've heard from you. I know you are in a drift. Something is happening to you. Your experience level is changing. Your confidence level has boosted. Am I correct?
Yes, sir.
Did you answer?
Yes, I said yes, sir. Not hearing me?
Good. Yes, I'm correct. So Chiblaze, I can feel it. I can feel it as well. Why am I doing this? What do I want you guys to understand as we move into strategy? Is if I get into that, own the strategy. So I think I'm just going to say this. Strategy in trading is your timeline of executing your understanding. Strategy is not a knowledge of trading. Okay. Understand what I'm saying? This is the first part of the strategy. Strategy is not a knowledge of trading. It's a practice of knowledge. When you see this from the perspective of first knowledge and practice. So how do I execute my knowledge? My proof of knowledge is the execution of my practice. So strategy is what gives you a proof of your knowledge based on the data of practice. So a lot of students, a lot of people in trading, they know market structure based off on strategy. Many videos I went and I saw online on market structure were built with a strategy. And one of the major strategies is market structure shift. Market structure shift is one of the biggest exposure of market structure. So many people love the concept of market structure shift based on the strategy approach. And hence, they have less understanding of market structure. Okay. What I've done over the last couple of weeks is build the understanding of Forex trading and interpret Forex through the perspective of the foundation of liquidity. Now we are icing the cake by a model of practice and execution through strategy. it's different. Okay, it should be different. So don't allow strategy misguide you. The market is dynamic. Know that. So there are certain concepts, and I'm going to say them vocally, that we built over the last couple of weeks. So number one concept is, to get a bullish market, I have to establish two lower highs and two higher highs to get a bullish market, to get a bullish structure. Opposite is a bearish structure to get a bullish liquidity. So these are concepts. They are like so I've taught you, I've showed you, I didn't only tell you, I showed you based on the chart. I repeatedly showed you chart that before distribution comes in, you're going to find the third wave. Okay, and I was able to link it. So it's a concept of how the market has been, and you've learned that concept. So strategy is how you practice that concept. Do you guys understand what I'm saying? Are you now label it to be kind of like a code of conduct? If I decide today that I want to show you that the market moves in two ways, trust me, the market also moves in two ways. Trust me, the markets also move in one wave. You agree with me? If I decide that that's going to be the mode of what I would see what I decide, because the market is a variation of everything you think it is. You will see everything you want to see. But it all comes to numbers. Okay, that is why a very big part of this is going to all boil back to you in, there's what I would call, vet this knowledge yourself. Everything that I've shown you, go into history of the charts that are good and vet it. Back test it, see it yourself, because at that point I will not be the one showing you. You will be the one. I know some of you have done it, and that has boosted those of you that have really seen. Okay, you've done it, and you see that, oh, wow, there's a difference when you come back and say, I did it, I saw this over a period of over a couple of charts, and I saw that this is valid. But you would also find that there are other variations. That's why I said market structure, the foundation. We are on the foundation. There are other variations of different. So after market structure, there are different ways distribution comes. One of them I have told you as a foundational student is majority rests more on the third wave than the second wave. That doesn't mean there is no second wave. That doesn't mean your first trade comes from the third wave. Okay, because there are other variations, and my goal is to give you, using the strategy, I want to give you, okay, two things: the anticipated entry and the formation entry. I gave the last class a bit of clue, okay, because as traders we're speculating. There's a part of us that speculates what's going to happen. All right, based off or not. Now your speculation is going to be based off on, because most good trades, big trades, can leave you if you're too late. If you're too late, you can't lag like a candle. So part of you have to be a prophet. Okay, part of you have to predict the next move, but predicting from a place of foundation is better than predicting just, I come in, this market is going to buy today, sentiment is strong, you're gambling. Okay, so this is what puts you off. I'm saying this because for everyone who's going to be watching this video or you're here today, I want you to have an understanding that strategy is an expression of knowledge. It's chosen, so write the word, chosen expression of knowledge. It's not all there is. So one of the strategies you're learning, right? So you don't say tomorrow that this is market structure shift strategy, the only, there is no. So market structure have shifts, market structure have show, market structure have arc, market structure have Fibonacci. So every different ways the market is going to move. By the grace of God, between now and December, okay, I'm going to cover all of them for those of you that are going to continue after this, okay? But I'm only going to do two, which I promised within this session, which is very foundational. So the first one is market structure shift. So what is market structure shift? Many of you already know it. but today's strategy. So let me share my screen. Okay, hold on. Let me see if I can pull this up. So I was supposed to send you guys a PDF, but there were certain modifications. The strategy was intertwined, but I'm just going to use it on the session right now to show you. Then I'll break it down. I have some correction I'm going to do on this, but I'll share it. But you guys will just see, focus on what I'll be saying. Then okay, so let's make this big. Okay, beautiful. I have it. And let's hit it. So take screenshots of where I'm going to focus on. Though I'm also going to send what you need when it's so beautiful. So let's first look at the concept of market structure shift. Why is it looking so small? Okay. I think I'm going to use it from my system. I don't like the view. The view is so small. Let me do it from my system. It's going to be bigger. Okay. I think it's bigger now, right? Can you guys see my screen? Is it bigger?
Yes.
Okay,
Yes.
good. So the first thing, get the concept of a shift. So what is a market structure shift? So a market structure shift is the leg that takes away the previous swing high. Is the market that shifted. The leg that shifted, the leg that is called a market structure shift is the leg that takes away. So let's just call it a change of character is a market structure shift, the first change of character. So the leg that takes away. So when you see on this concept right now, so this is a bearish market, the leg that takes away. This is what? The shift leg. So the market has shifted when the previous pillar of a high is taken out. So it means that's a shift. That's what called the market. So in trading, a market structure shift happens when there is a change of character. Or is this calm down? Are you guys with me? So I want you guys to understand. So this is the formation. So after a market structure shift happens, so now it doesn't always happen in charts like this. It's not always the first. It's not always the first. It may not even be the second, but it happens. A market structure shift happens when there is a change of character against a previous or preceding trend. Okay. One of the things I'm going to be doing on this session is, because it is strategy, I'm not really teaching, I'm showing. Okay. So I'm going to be sharing two screens. Let me share, let me see this. Come here. Then yes, let's do this. Okay, beautiful. So I have this, I have Chrome. Okay, good. So I believe we have this and we have Chrome. So I'm going to be showing the market. So I want you guys to see a shift. So there are components that can be put together. So this is a trend. This is the high of a trend. Okay. And the trend came as low to this dimension. So the market came these. Okay, so we could use here as a low. Okay, so this is the low. A shift is the leg that takes away the. So this is the previous what? Lower high of the market. Okay, and that is also called the what? Change of character. So this leg is actually what? The market structure shift leg. You guys got it, but I got it. Okay. So that's that, and a bullish trend. So is this higher than this? No, this is high. Okay. So since this is high, this is the low. Okay. This is a low that created this high. Okay. So when the market structure shifted, so we could say that this is the leg that shifted. Now this leg, okay, good. This is the leg that shifted this high, this bullish trend. This leg shifted it because the moment it takes away, and sometimes it's always blessed, or you have to factor in the component of a shift. If it is shabby, the trade is going to be shabby. If it is bullish or bearish, that's strong momentum, the trade is going to have strong momentum. So if you look at this market, it actually changed shabbily, and hence the market didn't move quickly. Okay. Now you want to look at this. So this is also another, when market consolidated, went up again. Okay. So the leg that took it up is almost like equal high. You see that this is the leg that took this, and the moment it broke, so we could say this is a shift leg. You find that this is a crazy shift leg. So you can see that the difference between this thing and this thing, look at what happened. Came back. What happened after, okay, was to what? Next distribution. Okay, straight, next distribution, straight up. The move is always very, very, a lot more powerful than the previous, than the one that closes shabbily. Now, what I'm trying to do here is I'm first showing you the shift before I show you the strategy, the strategy of execution, because you execute after a shift. This is going to be different from what you guys have learned before. In fact, this is going to be simpler than what you've learned before. Okay, so and this sometimes may kind of not comply with the, there may be some shifts that have not established, that are not established on these two factors of bullish and bearish, that you have the third wave. Some shift at the first wave. Okay, some shift at the first wave. Now, if you look at this market, this is actually the third wave. Okay, so if this is our high, this is higher than this. Okay, this is the second, this is the third. Okay, okay, this is actually the third wave. All right, this is the third wave. That is what we're looking at, this, and this. Okay, so you find that the shifts after the shift, the third will happen. What happened after that? It complied down to the next range. Okay, so it's very critical you understand how you implement what you have learned on market structure and using the shift. But the concept of showing you the strategy or starting the strategy with you is to understand that it happens. So market structure shift trades happen after the shift. Market structure shifts. So what is a shift? When if in a bullish market, when a swing low is taken out, that is change of character. That is when the strategy happens. In the normal sensation, a bearish market structure can happen before it takes away the change of character. True or true? So you don't begin to confuse yourself. That's why I say there are different variations. Okay. There are markets that would happen that will not take away a change of character. It means that market has not shifted. Okay. And before you get a 4-hour trade, a daily trade, market must shift on a 1 hour. So this is how your understanding will play in the use of the strategy. That's why I'm showing you what a shift is before we now go into the details of the strategy. Are we together? Put tracking on the chart. Okay. So I've showed you different variation of shift. So in this market right now, so this is a bullish market. So market was bullish from here, okay, all the way to this area. When did this market shift into this bearish structure? Okay, when it actually took away. So this is the low that created the high. You always want to pay attention to those details. The low that created the high, okay, is the pillar leg. So this is the leg that shifted this bullish trend. This bullish trend was shifted with this leg. Okay, and this is the pivotal point. Are you guys getting this? That's the pivotal point. So after that happens, so you can see that I am ignoring many activities. So there was a low, there was a high. There was a low, the market came to what? Again. So at this point in time, you can make decisions on entry because some of you have been asking yourself, at what point do I enter? Okay, this may give you a lead. When the market shifts, you can look for a trade. Okay, so in plain term, you can look at this. Okay, in a bearish structure, when this happens, you can now look at the next wave for your trade. The next wave after a change of character, because before a market will change a character, it must have formed. So change of character is kind of like a mini distribution. It must have formed maybe 1 or 2 waves most of the time. But if it's just one, okay, then that wave, the next wave coming in after the break, after the change of the market structure shift, okay, the next wave may actually be what? The third wave. Most of the time, we're going to look at it. Most of the time, after a change of character, the next wave is actually the third wave. Most of the time, except there was news. But if there is no news, when I say something, we would look at it together. Okay. But this is what I wanted us to understand first. The leg that takes. So there is no market structure shift. Okay. If there is no change of character, have we established that? Yes. 400 on chat. Yeah, because this one is different from the other strategy I've been showing you guys that I'm also going to be showing you right now, which is the shift strategy. So there is a shift strategy and there is the market structure shift strategy. So I hope you guys are complying. Okay, 100. Good. Let me push this a little bit further. Let me see. So I just wanted to show you guys now. We're going to be getting the other concept. We're going to be putting some things together, but I first want to show you guys this. So this is a bullish structure. We've seen a bearish one. Okay. Now, the shift leg may be induced by what we call liquidity raid or liquidity sweep. But let's not focus on this. So I'll Bible this for you guys. Okay. So let's go back to the market. So there are a couple of things I want to put together for you that will be called a checklist for you guys to follow this. There's going to be a checklist. At what point should I start looking to trade market structure or bullish or bear? At what point? What are the things that I need? Okay, there is a checklist that I put in place that may be modified during the session, but I need you guys to write it down. Okay. Okay, before we do the checklist is like the final. Let's move into the second wave. So after a shift, okay, entry is the next phase. After the shift, entry. So there are a couple of things that we now have to look out for. Let's go to, let me go to my, so this is a range in thin line, okay? In thin line, that when I say thin line, that means it's just a definition of a range. So this is sell side liquidity, this is buy side liquidity. Now market pulls down. This is called what we call what? Mitigation of buy side liquidity. It means the buy side liquidity has been respected. Okay, and this is what we call what? This is what we call a raid. A raid of previous liquidity. Now the concept of, I mean, if you understand, if you're here today, you understand the concept of a raid, liquidity sweep. Put 100 on the chat. If you don't, put I don't. Okay, let me do this quickly. I've taught it before. I don't know how many of you were present when I taught it. It's simple, okay? I'll put 199. Okay, good. So you guys understand. I think I've taught it. Read. Okay, so many of you are my students already that have understood. It's good to always do free training. So you guys, or did I teach it on market structure? Was it here I taught it, or I taught it before you guys came in here? So RAID. So since the market is about liquidity, the movement of the market is either for liquidity or against liquidity. So there are people that are trading and mopping liquidity in the market. So every trade you take in this market leaves a data of money you left in the market. So everybody who places trade in the market is showing liquidity. Now, there are two types of traders. Those that trade to get liquidity and those that trade to take liquidity. So the investment banks, the institutional traders, when they log in to trade every day, they are a higher version of people that are looking for the liquidity of the day. While you and I that are spot traders, we are those that are searching for liquidity that we can get. There's a difference between getting and taking. True or true? So when we search, when we trade, we are looking for liquidity. But these people, they know where liquidity is and they take it. Hence, we do not operate on the same terms of fairness. So these people, because they see what you don't see, you see charts, they see data. So every trade that is taken, they see it. You don't see trades that are taken. You only anticipate that trades are going to happen here. So for every trade you anticipate and you execute, leaves liquidity in the market. So these people, they see the liquidity and they can do what? So when they sweep liquidity, what it means is they've taken money from you and added to their own, and they can control the narrative with the more money they have. Do you understand? Because they do know something. If the market is going to trend, the moment they start buying with enough money and people begin to see those buy, they will start following the buy. So all of the money they stole from you, there is every possibility you want to go give them more because now the trade is going your direction. There's a psychological play that when the trade start buying, even if you entered quickly, you would go and re-enter. So they make money from you double. The first is they take the one you put in and they know that when they start buying, you will get in again. So they are making double money with the concept of what? A liquidity sweep. So that is why for every bullish move, liquidity range that will be covered, there must be a raid. Most of the time, the market must raid before it will distribute. I'll show you guys this, all right? So you watch this. So this market distributed up and covered this range. So this was a range. Okay. This was a range. When it came down, this was a buy side liquidity. It distributed up, okay, and covered the range. Before it distributed, there was a raid. In fact, this had a double raid. It tried to buy up, deceived a lot of people. All of a sudden, come quenched. So you watch this, all right, quenched. Some are short. So some people would have properly put in volume, because a lot of people buy technically. They'll say, oh, the moment the market came here and it showed a little bit of reversal, they would have gotten in either on an hourly or however. Okay, and the next thing is they wiped out before a move. Now this move didn't complete. They wiped out again. After that wipeout again, what happened? Okay, so that's one. All right, let's look at another one. So this was a range. Okay, what happened? So if you're looking at just trading technical, what happened here? It was wiped out immediately. So, okay, fat. All right, and eventually it came back. Are you guys getting it? There was always a raid. Sometimes there's no mitigation before the raid. Sometimes it's just outright raid. Okay. So let's look at another buy side liquidity. So there is a buy side liquidity here. Okay. What happened? WAP. Dangerous one, just like what is happening in JPY right now. Eventually came three-way, right? Va, distribution. Okay. It's moving and eventually clicked in. So that's a deeper one. So for every major move in the market that would distribute a high, like a strong distribute into daily for our major distribution, you're going to find major raid. Okay. So this was liquidity point. You find out this was liquidity point. Okay. There was a slight raid. Market didn't complete the liquidity. Can you see that every liquidity that will be, every range that will be covered, there must be a major what? So this was a major sweep. This was a major, it's going, everybody's buying, everybody's happy, but it didn't complete the range. When did it complete the range? When it swept crazily and eventually completed the range. Are you guys getting the concept of a rate now? Okay. So it's part of the component of what you put into your trade, into your trading. For every, it's the same thing with the buy side liquidity. Now, this is a sell side liquidity, right? Market did not hit and start going down. What it did first was what? It raided it. Okay. Then start forming bearish structure. Can you see? So we had what? One. Okay. Two. Third. Where did it go down? Where did it go down? It went down the layer of what? The raid material, the range material. So this is the range level. What did you have? You put this, bring this back. Can you see how equal it is? So it completed the range after it has raided. And when it formed bearish market structure, you just thought the trade was equal. It's not a coincidence. That's a range. So it's something you guys should put into consideration. That's one of the things I put into consideration. I studied and I put, so these people, they manipulate us thinking it's just technical analysis, higher time frame. No. For every major move that would exceed. So I'm trading range now. I'm not just trading for 30 pips and 40 pips, 20 pips, or trading for what I can get. No, there is a knowing that if I get this range, I can get it. So for me to complete my trade, I need a concept. So the concept is you would only get your concept after the raid has happened, after the people have manipulated. Are you guys getting what I'm saying? After the manipulation have happened, you will find your trade. If there is no manipulation, you're just trading technical. You have not traded liquidity. Because for every major liquidity drive, there must be a manipulation. Put 0 on the chart if you got that concept. I wanted you guys to have the concept of raid. So it means you are safer because the manipulation have happened. So every trade that would happen after is natural. Amen. Are you guys with me? If you guys want me to flow the way I want to flow, you better answer me, because we are on a very serious thing here. Okay. So the raid is a concept for liquidity. that is also part of the market structure. So inside of your market structure, that your market structure that is forming is actually maybe a raid. Okay. Then the second thing is a shift. So after a raid, a shift. Are you guys getting it? After a raid, a shift. I'm putting the shift strategy together. First is, so the number one thing is mitigation of liquidity, either a buy side or a bear side liquidity. Then the second thing is a raid. Then the third thing is a shift. Then after the shift, our strategy comes in. Okay, so good. So this is the mitigation of, so let me label that. Mitigation of buy side liquidity. Why it's so big? Let me make it small. All right. Is this small? It's good, right? So this is mitigation of buy side liquidity. Let me make it bigger a little bit. 14 is okay. So I'm doing for what? I'm doing for a bullish market. So first thing is the mitigation of a buy side liquidity. The second thing is a raid. Okay, then the third thing is a shift. So this is a raid. So that's a raid, okay? Then you need a shift. That's a shift. So this is called the so this is market structure shift. So there's a shift. So this is the shift leg. Identify the leg. The leg that shifted is called the market structure shift. Okay. So there's mitigation, there's raid, there is market structure shift, and just know the shift leg. Then the next is, so this is where we now factor in the variation. Okay. This is now going to create a new leg. You have to identify where are the possible leg that would happen in the market. So one is you can identify a leg from here. Okay, there's a possibility that there can be a leg from here. Why? Because this market can come back, okay, and now respect this range and pull back. So there's a possibility of that leg, but there's a technical possibility. The go for, I'm just identifying that as I find, but I'm not really trying to say this is the yardstick for this shift strategy. But after the shift, there are different components that play out. Okay, it may come to the component of playing the previous buy range, okay, which is the floor of the buy range. Very healthy to take that as a yardstick. But there is another yardstick, which is fairly very general in the market. It is called what? FG, fair value gap. So for every momentum, there is an imbalance. Okay, so market will always come to that imbalance, feel that imbalance and push. So I'm going to give you guys a component to measure an imbalance, okay, with a technical structure. So, Kenby, what does this look like? But have you guys gotten this? You can take a picture of it. So, all right. So the first is mitigation of buy side. For a bullish market, you need a mitigation of a buy side liquidity to identify the range okay? The liquidity range. Then number two, there must be a rate. There should be a rate, okay? The market rates, whether small rate or big rate, there must be a lower low created, which rates the previous one, all right? Then number three, there has to be a shift. Before you think of trading, there has to be a shift. It means both sentiment has changed, both character has changed. Now you are trading after a character has changed. So you are switching. So for a market to change character, most of the time, it has created a bullish structure. So forget that I'm using one line. If it's a chart, it's different, okay? For a character to change, most times that's created what? A bullish structure. So now you're looking for how to get in on that bullish structure. So this is a variation, a fair value gap variation. All right, so let's go look at the chart and find this right now. Okay, so I'm on, let me go to a 1 hour. Okay, I'm using this chart, it's very effective. Let's see, I don't want to delete these things. So let's look for, so there was something here. Okay, so there was a liquidity point here. So there's a buy side liquidity, and the market, when it bought here, it actually came here. So we have a buy side range here. So we have a buy side range here. Okay, good. So let's see how the market played out. Okay. So first, let's identify when this market came down. This market is going to be very dangerous. Okay. What low do we have? Which one is lower? They kind of equal. Boy, watch this. This market is going to be kind of difficult for us to find because we have series. We know, you guys know we're in a 4 hour, right? So there is a low here, but there's a blue candle kind of like, okay, you guys watch this. Okay, let me put a line here to see how it looks on the 1 hour. So I just put a line here and switch to 1 hour. Where did I mark now? Where was it? Where did I put that line? I was supposed to see the line. Is this the backwards? Okay, yeah, all right. So I have it here. Okay, good. So let's see how healthy this leg. Okay, yeah, this leg is healthy, it's valid. So on a 1 hour is very valid. So this is the low that created what? This. So that's where our change of character happens. Are you guys with me? So that's where the first change of character happens. Okay, so this leg is the shift leg. So identify the next thing. Since we have now watch out. So let's go back to the details of the strategy. Okay, so first we have, this is the range. This is where the market took off. So this is our range, our buy side range. Okay, then the next thing is, I could say, yeah, the next thing is we had a new low, which is our raid 2. So this is mitigation, this is raid. Then market started forming. Okay, so I don't want to go into the details of the bullish market structure because we all see that it has happened here. So I told you guys, most of the time market would definitely, all right, create a third leg. So you can see, can you guys see this? It has formed bullish market structure before it actually changed character. Can you guys see that? Okay, so it changed market structure. So bullish market structure was already distribution. It has already started distributing, but that is where the change of character happened. And after the change of character happened, look, this is now totally the shift leg. So from where it started from to this leg is the shift leg. Are we together? Okay, now what happens after it comes back? So let's study this trade and see where it anchored. Okay, you will find that after the change of character, there were a series of candles. Okay, this is 1, this is 2, this is 3. And when that candle left out, it created an imbalance. So we have 1, 2. What happened here? So the gap, there was a gap between, so you would always check the market. So there's a gap between 3 candles. Candles are supposed to follow each other. But when market makes some momentum, it creates an imbalance. Market always come back to those imbalances to fill them. Like here, there was an imbalance between here and here. Okay, based off on this time frame. So this would have been another one it could come to and move. Because when the market broke this area, it created an imbalance. So sometimes market will come to those imbalance. But here, because the change of character is here, it took this imbalance candle and filled it up. After which happened, major pa 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 pa, and that is bye-bye to what? The next range. Next range completed. Trading range completed. After what? The filling of that gap. Am I blessed? Okay, so does this explain what I'm showing you guys now? So this is called the market structure shift strategy on fair value gap. Okay, you have to be patient. If there is no momentum, if there's no imbalance, you will not find a good trade. So you trade the imbalance, and the imbalance most times is what changes the character. All right, let's dive into another. Let's go find a bearish market. Okay, let's look at a bearish market. Okay, good. So we have a bearish market. We have a bearish market here. Let me look at, so let me put this here. So this is another structure. Okay. So we're going to look at first a mitigation. So this is a mitigation. So this is an area of price. Okay, sell side liquidity. Now we're doing the buy. So we're looking at sell. This is a sell side liquidity. Okay, and it came all the way down here. Cambry. All right. So when you're trading, you always have to look for someone will say, oh, can we look at this? No, this is not. If I'm looking at this sell side liquidity, then this would be my range. Isn't this poor? There's a bigger one here. This would be a good range. You agree with me? I taught you guys range on the last session. That's what I focused on. So nobody should be arguing with this. So this was a range. So this was a raid. So there is mitigation. There is what? Raid. Are we together? I want to know you guys are following and that you're having fun. I always tell you that. So if this is so I'm going to play on two things you guys should know. Okay. So if you look at this market, there's a slight low here. Okay. That's why you guys need to pay attention to this next thing I want to say. So there's a low here. It's shabby. So there's a shabby low. Okay. And there is a shabby. Can you guys identify that there's a shabby change of character? And that's also very beautiful because that falls low, okay, into the range. So this blue line here is my what? Liquidity range. Okay, so and that's good. So what's the next thing to look out for is you have to go find a fair value gap factor, okay? But in the cases of this, so after the low, in the cases of this market, okay, let's switch this. So watch this. Amen. So between this candle and this candle, there is a gap. So when this trade broke, what did it do? Are you guys seeing me? So between this candle and this candle, you only have to watch three candles. So this was a momentum candle. There was an imbalance. Okay. And when the trade, so after the imbalance, you now have to watch for what? So it's the rate. You have to look at the rate. After the rate, that's when you look for your trade. Where would the trade come to? An imbalance. So immediately this took away the change of character. What happened after? You can see a bullish candle went back, rejected. Where did it reject? Fair value gap. Amen. Are you guys loving me? Amen. Are you guys getting this? Let me know in the chat. And after that happened, voila. So this does not wait. This strategy does not wait for any other thing. Okay. So you will see this trade better. That's why I put it. You will see this trade better. You say, oh, Cambry, but there is no third. There is a third, but on a smaller time frame. When you look at this is a wave up. This is a wave down. This is a wave up. Okay. This high is higher than this high. Can you see that? Okay. And this is a wave down that changed character. This is a third wave. After the third wave, what happened? Voila. Are you guys feeling me? Okay, so you always find that everything works together, right? Your confidence level is going to be stronger when you know that there's a third wave. Now I'm adding another layer. There's a change of character. After the change of character, you got a fair value gap. Oh boy, you can stay on that trade and you can first take your TP here. Okay, so I know that when I see this type of move, I'll take first TP here. Okay, so this is on 1 hour. I bet you the trade did another magic. Someone will say, Cambry, this is all just bullish candle. This is the valid. This is another what? Low that would probably be good for what? So if I didn't consider this as my change of character, this was another, because this is kind of like shabby. That's why I said it's a shabby one. But inside that shabby one, a fair value gap was activated. But let's say we go low. Someone say, oh, I want to be more diligent. This is a low. Okay. So do we have a change of character here? After the change of character, what happens next? You now go up to identify. Okay, where did this market return? Amen. It's a fair. So this is an imbalance candle. So this, you watch this, to this area, there is a gap. So after the change of character, market took a while. Boom, but we already did turn. Fair value gap. So if this is what you waited for, are you getting it? It also activated the fair value gap. And what happened after? Voila. Okay. And that deep one. So this is, so if I shift from a 1 hour to a 4 hour time frame, you love this other one more. Okay. There was I. Okay, good. This is all that looking. Okay, yeah. You love this other one more. Okay, because now you see clearly. So inside here on a 4 hour, there is no change of character here. So you can see that this is the first change of character. Okay, so you see that this is our first low. Okay, went up. This is our second low, went up. This is what changed character, third low. this is wave. This wave. So this is the third wave on the 4 hour. And after the third wave on the 4 hour, what happened? It did not take time. It distributed longer. Okay. Can you see how big time? This is now where time frame plays. So in a 4 hour, it also completed a third wave. Okay. So this is wave 1 returned. This is wave 2. Okay. No. I think this market only did, okay, on the 4 hour, I did only, what do we have? So I have wave 1. No, this was taken. So it just did, this is wave 1, wave 2. Okay, after wave 2, moved on wave 2 on the 4 hour. Are we guys seeing the beauty of this? Okay, but where did they move? You find out that it's, so on the 4 hour, so we have clearly a bigger imbalance. Okay, so we have this and this. Okay, so you would have said, oh, Cambry in a 4 hour, don't another thing you guys should learn. Okay, don't take it's dangerous to take, except you are all in for swing trading. Don't base your fair value gap on 4 hours. It's too big. They're always too big. Okay, they're always too big, but you find out that that's what this market respected. All right, and made a beautiful move clearly. And when, but I think the best trade happened when it was on 1 hour. Okay, when it was on 1 hour, that's when you would have gotten your best slice out. Okay, this is not the first one. So why do I like the 1 hour? You find out that this is my range. Okay, market played out. You will find the structure very clearly. Market played out 1, 2. Now this is the low. So there is a low here. Okay, this is what I am looking for. It means if my trade is lower, all right, my trade has to be, my execution has to be in the model. So two things I'm looking at. I'm looking at the mitigation point, my trade around my mitigation point. It means you're selling the previous mitigation. So my fair value gap closer to my mitigation, my previous mitigation point is always a valid one. This is not something you guys write by the corner of your notes. Okay. Try to always get in early. So I always look at fair value gap around the previous range, top of the range for a sell, bottom of the range for a buy. Okay. So again, what are you trying to say? The first is I put a line to outline where my previous range was. So this was my previous range line. Okay. So it means I'm looking for a fair value gap. Okay. A trade. I shouldn't be taking trades that are too low than my fair value gap. You can see that this trade, if you are seeing a fair value gap around this area, it would have been better than seeing a fair value gap below this area. It means trade has moved. So execution of the trade around the previous high is a yardstick for the beauty of that trade compared to when it has gone. So I would have loved this trade more than this trade because this trade has given so much risk, okay, than this. So if I executed, imagine you taking a trade above an entry for a sell, you have more potential for a win, okay, compared to taking it below an entry. Do you guys agree with me? Okay, put A on the chart if you agree with me. So that's one of the things you guys watch. I'm just giving you guys a flow of the variation. So mitigation, raid, shift, fair value gap. 4 things you look at for. Any question on that one? So right. I'm going to look at 2 more analyses and I'm done with this strategy today. Did you guys lose me? I think my network shifted. Am I still here? Can you guys hear me okay? So I'm gonna move to another pair. So let's look at Euro USD. Okay, and we'll see. Let's just look at another factor. So this was a, I'm on a 1 hour. So this was a sell side liquidity. Okay, and market rejected. Okay, yeah, there was distribution, but was halted. Market came again. So that's still, you watch out. Okay, the trade actually didn't complete the circle. It came down and came back again, and market is almost reading the previous area. Okay, but trade moved but didn't complete the circle. I want to look at something that completed the circle so that we'll see what we're looking for. Let's see. Let me shift to 4 hours so we can go back in time. Okay, so we could say this is sell side range. Okay. Let's watch this. Let's look at this. So this is sell side range. This is a raid. So let's study that. That is what you do. The same thing I'm doing right now, that's what you do on your free time. Study the trades. Okay. So what do we have? So we have our mitigation. Then we have a very bullish range raid. So we already have our third wave here. This is 1, 2, 3. But you want to watch this right now. Okay. At what point was the trade? Man, this trade got some. So there was a, so let's say this is our shift. Okay, I'm on 4. Okay, no wonder I'm seeing this. Okay, so if we clearly go down on a smaller time frame, we'll see that this area is a low. Okay, and this area is a low. So let's just abbreviate. Let's just focus on those 2. Okay, so this is our change. When market change character, the market changed character clearly here. Okay, on this leg. Okay, what happened after? when it changed character. After change of character, what did it do? It went back to a gap. So there is a big gap on the 4-hour between this candle and this candle, okay? So this is what it did, and eventually, all right, pulled down after that gap. So it means there was a gap after change of character. So trade played out. But this trade, I wouldn't have too liked, because on the 4-hour, okay, well, the range was completed after. I would have exposed too much risk. Okay, but I want us to go up a bit again to say it happened. So this trade actually played out the same thing, okay, on, okay, I wouldn't, man, this is not too good. So there was, if I taken this one as a change of character, that's if I took this one. If we move to 1 hour, let me put a line here. So all I'm doing is, and this is what a lot of people do, most trainers, they always want to show you what they think is perfect. No, this market is not perfect. And I'm trying to find the imperfectness of the market by looking at it the way it is, not because of how I want it to be. Okay, so we're looking at it at a different variation. How did this market really play out? So this is a high. Okay, before that high in a 1 hour. Okay, let's go back. Let's see how it played out on the 1 hour. Is it too old to go back? Oh, sorry. Where is my, okay. So I got my area of markup. Boom. So because I want us to see all of the components put together. Don't just look at a trade because it's selling now. The component put together. So we have, yeah. So we could say this is the low that created what? Our high. So this is our high. So this is the neck of the trade, which is where our change of character happened. So this is where the change of character happened. Okay. What I want to spot on right now is if this market really played what? A gap. If this what market played a gap. After it rated, it has to come to a gap. Okay. So let's look at this area. Oh boy. Let's see if it's correct. So I perceive this is not. So when this market moved after rating, after changing character, it came here. So there is a gap between this and this. Okay. Boom. So I like it, but most of the concept of the gap is it has to take the gap without beating it, because for this now, okay, this comes to another thing. Most people that use fair value gap to trade, they trade because of the minimizing of stop loss. But I'm not going to teach you fair value gap concept because of stop loss. I'm teaching you because of market structure. So the parameters are different. Are we together? So most times when people take a fair value gap, they put their stop loss slightly above the fair value gap or above the high after the fair value gap. So if I've used the high after the fair value gap, because there's no need on market structure, I use the high after the structure. That is the whole idea. So if I'm taking this trade, I'll put my trade on. That's the sheet strategy. I use the high. Where is this? On a short position. So if I'm taking the gap, okay, I'll put my stop loss here. Okay, based off on the shift. Okay, I will use this. But on the fair value gap strategy, it minimizes. This is why a lot of people would love it. It minimizes your stop loss to the next high. So you use the preceding high, okay, rather than the whole high, because that is the whole goal of fair value gap. Okay, it reduces your, because if it blows this away, then trust me. Okay, so this is actually a rate of fair value gap. But at the end of the day, this is the next high. Are you guys getting this right now? I'm not bringing in the component of risk. So I've shown you guys the component. I'm not giving you how you apply your risk. Your risk should be, okay, fair, because that's why it's called a fair value gap. Okay, put your risk above. So if that was it, this would have been a fine trade into distribution. Okay, so let's look at this one as well. So if this was it, so this was a gap on the 4 hour, there was a gap. So if you chose this other one as your change of character, okay, you find out that there is a gap between here and here. So where do you put your stop loss? Here. And you distribute that. So you don't need to bring your stop loss all the way here. It will be on the next high. Does that make sense? So I'm giving you guys how to choose your stop loss. Now I'm giving you how to choose your entries. Okay, where is the entry? Anywhere in the gap. So the beginning of the gap, okay, or you could use a low. So this is another part of the fair value gap. You have to now attach things to make the trade good. Technical factor. When the market takes a previous high, a previous low, okay, comes back to it, it's called a retest. So you can use the fair value gap to buttress a retest. So here, you can use this area, okay, inside of the gap to be your trade. Okay, or better still, use the area of the change of character. So if the fair value gap falls in your change of character, use that as your what? Entry. But if it goes above your change of character, just find a low, because it's a downtrend. You have to find it. When market breaks a low, previous low, it will go back. So if the fair value gaps fall in line with your low, okay, just take that low. So that helps you with an entry point. Does this make sense? 2 cents on the chart if you got what I said. Okay, but the yardstick for taking a trade is the fair value gap. So you can either decide to take who's talking? Okay, so you can either decide. So what a lot of people do when it comes to fair value gap is they take the beginning, okay? So wherever I start, that's when they put your stop loss. That's what some people do. But I think from research, I've seen that technical power comes in when the gap is present, okay? Present. So this would have been good. All right. So you can see that all the trade responded to different technical areas, and that's fine. Are you guys feeling good? Okay, I just show one more and I'm done. So let's look for a bullish market on EU. Okay. Oh boy. So I think there's more bearish market on EU. So let me look for. Let me find another pair. Okay, good. I think we have a bullish structure here. It's rated and double rated. So trade will actually happen above here. So this, if I'm looking for this bullish structure, this leg created this low, this leg created this low. Okay, so let's watch. So this is our first change of character. These are a change of character. So this is our raid. Okay, this is our shift. That's our first shift. That's our shift. Okay, we have something here, but I don't know. Now the impulse after that. Can you guys see this impulse? You want to watch this because that is one big impulse. I always watch what I'm seeing in lines when I'm teaching this. If the change of the character is shabby, the trade is going to be shabby. But if there is an impulse, you will find a good move. So you can find that between this area and this area, there is a gap. Where did this market take after some couple of hours, maybe the next day? Okay. So you find out that this is our liquidity range. Okay. This didn't complete it. Okay, came back down into a fair value gap and did what? Busted the roof. So after a fair value gap move, most of the time, that's after a change of character, market completes the fair value gap, you've always find good distribution. Have we all seen it now? Okay, that completed the circle. So this is another bullish dimension. Okay, so we had this. This was a raid. So there was a first raid, market went, came back, raided again. So you always have to consider the raid, last raid, then change of character. So mitigation, raid, change of character, fair value gap. So this move didn't come to that gap. This move didn't come to that gap. This was what came to that gap. And what did I say you can trade after on the fair value gap? I say you can actually take what? The previous high. So there's a high here. So that was my yardstick. And you see exactly that area. That's why the market moved. With this point, can I say I've been able to convince you, not confuse you? The variation of market structure shift with a fair value gap entry. What do you guys think? Madam Konyisola finally wants to speak after she has gotten a new entry level. Should I allow her to talk? Go ahead, Madam Konyisola.
Good evening, Coach. Good evening, everyone.
Good evening.
Apologies, I've not really been absent I've been absent in class. So I just want to ask a little question. So with this analysis you just did, so there was a first trade and then there was a second trade.
Yeah.
Naturally, probably with the first trade, we would have tried to take our entries, right? And then it comes back again. So how do you know that, it's not just going to continue down, right?
Okay,
if you're
good.
taking your first entry and then it comes back and takes you out,
Very simple.
that you can still continue with the second trade.
Very simple. So if it was the first trade, I would not have an entry because this is the change of character. So if you look at it, this is the leg that gave us this raid, except you want to now say, oh, this is now a raid. Consider a raid to be after a mitigation point. Okay, so this is a mitigation point. This is the leg that created this raid on this time frame. Now, it is not too healthy, like I showed you in the different strategies or in different patterns. It is not too healthy to actually get your trade below the point of mitigation. Have I said that before? Okay, this is your range. Your trade has to be a buy range. If you're buying below your range, it's dangerous. It's not too healthy. So when this market raided, okay, now we have on the 1 hour, this is a 1 hour trade. Okay, you can say, okay, you may decide to slice it. So this was a change of character. It all fall back to this area, right? Okay, but you wouldn't dare to say this is a change of character. It would not be too nice. Okay, if this was a change of character, a market came back, you will find out that you have not gotten your component of trade correct. Okay, first is this trade. Do you guys see a fair value gap yet? None. So one, it has not given momentum. It's just choppy. It's just choppy. You trade market structure on a moving market. Never forget what we've done on the whole concept of teaching you guys the component of market structure is to eliminate consolidation. You don't get good market structure on consolidation. Would you guys agree with me that this whole market was consolidating? Yes or no? Do you guys agree? So for you to be taking your market structure from a consolidation is already wrong. It's a wrong concept. The market has to trend. Okay, so it's either the market comes, pull down, goes up. If it does like this, no. You won't find good trade when market begins to do this because it's consolidating. You have to have sharp moves of trending market. What is this? My battery low? Oh boy. Okay, you get what I'm saying, Madam Konyisola, right?
Yes, I do.
So if you find out that the first one, so if this wasn't here, this would have been, if I choose this one is correct. If I choose this one more correct. So this is the leg that created, okay, this raid. So it means for a change of character to happen, okay, this is the raid. The next is the change of character. I must wait for market to take away this. So if market takes away this, okay, it has created a gap. That would have been fine for my trade. Okay, but if it is this, okay, you can find out that the market also created what? So when market did this, it created what? A gap as well. This and this. Okay, it created a gap and came back. So if I had even chosen this, where was going to be my next stop loss? It's going to be this low. So if I had taken this based off on this move, so let's just assume that this rate did not happen. Okay, this would not be the gap I would look at. But this is not the situation now because this happened. Okay, and this raided, and this gapped, and this entered. Simple. You already know what comes after. So now you've gotten your entry, now you've gotten your risk. Oh boy, oh boy. Sorry. Did you get what I said? Did you get what I've explained, Madam Coin?
Yes, sir.
Okay. Very simple component. Mitigation, raid, fair value gap, mitigation, raid, market structure shift. Okay, then fair value gap. 4 things to make up a trade. And I've shown you how you apply your risk. Okay, so if I enter this area, okay, my risk will be in this low. Okay, and my take profit is going to be this range. Very simple. Don't make it complicated.
So again, sorry, how do you determine the range to trade? If you're looking at a particular trade and that trade a particular range and that range is mitigated and then probably it continues on, do you like look at the latest or the last range mitigated to trade that range, if you understand my question?
Okay, good. So for this particular market, this is the lowest range in sight before these two. Because we're looking for a buy liquidity. You're looking at the buy liquidity range. So this is a buy liquidity range. Okay. This is a buy liquidity range. So if this is what was mitigated and rated, this is what I would consider to be my TP. I emphasized this on the last class. Okay, I did liquidity and range on the last session, and we actually repeated it on Tuesday as well. So because if you miss your range, you miss your trade management. So now that I know, I forget all this that happened after. This is my limit. The moment I hit this, bam, I'm out. So after this came, wow, I'm out. Because that's the range in sight. Except I'm now doing for a different time frame. And even in a different time frame, you'll find out that I already did you guys the calculation of the range. A range comprises of a move that does not retraces more than 40-50%. If it does, you're done. That's not the range. So when this move moved, it retraced. So this is the range of analysis. The moment it retraced more than 40-50%, you're done. That's not the range. Okay. So you could say this is a range. This is a range all the way down here because why? This did not retrace 40%. So this is all a range. Okay, so good. Because someone will be like, oh, is this going to come up here? This is as far as this bought. You're looking for a buy. So you have to look at a buy side. This is a sell side range and this is a buy side range. This is a buy side range. So if this had raided this area, okay, then this would be the yardstick of this trade. But this is the yardstick for this trade because this is where it raided. Did you get that, Madam Coin, sir? You missed our range class.
Yes.
Okay.
Yes, sir. Thank you.
Any more questions, family? So you guys got all.
Good evening, Mr. Kemry.
Good evening. That voice is unique. Who's talking now?
Mr. Nosa.
Okay.
Good
Where's
evening.
I'm looking for, okay, I was looking for my, yeah.
Good evening, everyone. Sorry, I just wanted to, for clarification and for recap, a raid, if you're gonna do a buy side, the market needs to be on a downward trend, because I think the shift is a reversal strategy, if I'm correct. So,
Yeah.
but from the example, well, one example you did, the structure, it's on a downward trend, and you said you were looking for a buy, and your range actually was your range actually was on a downtrend.
Okay,
I was
so
thinking, sorry, please.
okay.
I was thinking, if you're gonna buy, it needs to be from an upward trend. That's getting your range will have to be from the upward trend on your left, data from your left. But the structure, the present structure, it's going to be a downtrend, if I'm correct. Thank you.
Can you show me back? Let me, because it's easy to identify when you're showing. Is it the last market I did now that you're talking about? So that I can you can show me
this one, and the previous one that you did for a sell that had some technicalities. The range you took.
This one was for the buy.
Yes, if the structure on this was actually a bearish structure.
Okay, so I was looking at this bearish structure for this range. I was looking at the buy. This is a bearish structure. So we're looking for a buy. So I looked for a bullish market structure to buy to this range.
Okay, but if you the structure coming down from your left, from the larger range that you have on your left. No, on your left, sir.
This one.
Yeah. The structure is a downtrend.
Okay, I wasn't looking at this structure. That's why I said this is a sell side liquidity. So this is not my range.
Coming down to the last point where you got that's like a pullback. It's not basically a bearish structure. I'm just saying, so I don't.
Yeah. So
the structure overall is a bearish structure.
Based off on now, when you are trading range and liquidity, you are blind to. You should be blind. You should be blind to a trend. Okay. So I did not consider this. This does not play any factor in my trade. It cannot, it would not, it should not, it doesn't matter. Okay. This is the factor for my analysis is this present move. Where do I get in? That is where range comes in. So you select your range based off on a preceding. Now I'm looking for a buy. I look for a buy range. Okay. So if I'm looking here, so watch this. So this was a buy range. As this market was coming down, this would be my first buy range. Because why? It moved. This was a range. This is a bullish range. That's my first consideration. Okay. Now, after that is this one. Because why? This was lower than this. Okay. So I was okay. If it does not work for this, then yeah. After this was this. This is a buy range. This is a buy range. This is a buy range. Because why? I'm looking for a buy. Okay. This does not play any factor in my trade. This move here. Okay. It doesn't play any factor in my trade. Okay. This is the buy. This is a buy. This is a buy. And range only play a factor based off on extension of every liquidity drive has a starting and an ending point. Every liquidity. So range gives you, based on that time frame, when this market bought here, this is where it bought to and it quenched. This market bought here and it quenched. So you also quench. So the quench gives you your take profit extension. So if the market buys here, so it becomes my point of mitigation, buy side liquidity, because why? This is a buy side liquidity. This is a buy side liquidity. This is a buy side liquidity. So the moment the market comes here, it becomes a yardstick for my trade. So this raided this area. Okay. And there was a shift. So the moment there was a change of character, there was a gap. The gap is the strategy point of entry, okay? And to my TP, voila, I'm out. Every other thing is extra. Because why? I analyze based on range, except I'm on a different time frame, and that accounted. So you talked about the last I looked at was EU.
No, sir, please, just on this one, let me just ask a question. I think,
Okay.
Thank you for the explanation anyway. On this one,
was it this one I looked at? Okay, yeah. Am I correct? Was this what I looked
yes,
at?
yes.
No, it was not this. AU, let's look.
No, not this.
Okay, yeah, this one.
Okay, on this, the last buy side range.
This one.
No. To your right. To your right.
This one. Yeah, this one.
Yes. Okay. Can you, the next range, can you, if I'm going to look for a sell on the next range, is it possible? Since I don't.
This, based on this,
for a sell. No, for a sell.
Based on this one?
Yes.
Okay, if you want to look for a sell, it means, okay, now looking for a sell means you're looking for a sell here. So this becomes the range of your sell. So this was a range. This didn't do 40%. Okay, so this didn't do 40%. So this could also be your range.
Yeah, that's what I was talking about. Yeah.
Yeah,
so
this is your range for a sell. Okay. Now, when you look at this, so this had a function of a rate, small light, and this is where it comes to what I said initially. No. This rated, but I brought in a concept of the more momentum, okay, there is a factor of shabby. If you look at this right now, this is kind of like mitigation. Do you guys agree with me?
Yes.
Okay, so this is a mitigated rate. It means it rated but didn't close above. So it was not a pull rate, it was just a mitigation rate. Okay, and hence you see that the trade did not really move far. There was distribution, but it wasn't far. Okay, but when you find something like this and the structures come back, displaced, and take away this. So if the market had done this and take away this, okay, so this moved, came back down. So there was distribution, took away this. This would have been a yardstick for our trade if you find a gap. Okay, and you would look at this extension, but this whole extension, because this is not our sell side liquidity. But you look at it right now, market move, but didn't move far. So like I said, out of every 100 trades, 100 will not play out. But out of every 100 trades, if you trade on the structure and everything it holds, you would always win more than 70%. So this is one thing. So there was a raid, okay, and there was a displacement back. So this displaced back, this change character, it even had momentum after the change of character, okay? But for me, there was no gap between here and here. There was no gap. So you wouldn't have even gotten, because this trade actually didn't do big momentum, there was no gap. So if you were trading a fair value gap, would you agree with me that you'll not get a trade here?
Yeah.
So because there's no fair value gap, can you see that the trading up? If you always obey your setup, you would always be safe. So if you did it rated, it mitigated, it shifted, but there was no gap. If you took a trade, it means you did not take your setup. Okay. Hence, trade didn't play out. Most of the time, it happens like that. Okay, so this was consolidation, and I told you guys something. You were looking at it here, but on a big time frame, this market just consolidated. And market structure does not work on consolidation. All right.
Noted. Yeah. Thank you.
Okay. Any other question? Better get it now. Tuesday is gonna be fire. You guys know Tuesday is gonna be fire. Everybody got it, put 100 in the chat. So I just gave you guys a variation, which is the market structure shift, one of the market structure shift variation. After a shift, there's a raid. Okay, after a mitigation, okay, there is a raid. After a rate, there's a shift. After the shift, there's a variation of fair value gap. If you always find that, you will make money. So what do you do between our next session? Go verify, vet for yourself, check, back test over 100 trades if you can, 200 trades if you can. Okay, the moment you can find over 70, 80% of what I showed you, it's not going to be 100% because not all variation are fair value gap. But if you find over 50%, you've done yourself a good favor. Your confidence level is going to be great. Then you can start practicing from next week. Okay?
Coach, can I ask you a question?
Go ahead.
Please, what's the best time frame to enter, like to look for my entry? Is
What
it
did I say
15?
was the best entry? Who can answer that question? The way I answered it. That's not the first time they asked me a question. Who can answer that question? The way I answered it. Oh, except you guys have used it to watch Netflix. Someone asked me this question last week. Madam Chai, I told you, you are on probation. Don't worry, your answer is on probation too. Okay, so I'll answer again. Okay. Don't allow a coach give you a time frame for trading. Let your documentation give it to you. You already understand the concept. Go do it on a 5 minutes, do it on a 15 minutes, do it on a 1 hour, do it on a 4 hour, do it on a daily.
Okay.
Your data will show you your answer. The result you get on, because it's the same concept. This concept works on 1 minute, it works on 5 minutes, it works on 1 hour, it works on 4 hours. I've been able to prove it to you. I've done 1 hour, 4 hour, 15 minutes over the course of this. When you're vetting, vet it on 15 minutes, even vet it on 1 minute, vet it, you will see the same thing. The only things you're going to notice, which if you do, which that's why I tell you to do, is you're going to find more strength around the 15 minutes and the 1 hour. What you will notice with the 4 hour is it will go the longest, okay? But you would wait your head out. And a lot of traders do not know how to wait. So 2 things about a longer time frame is you will wait a lot and you would have the most risk. It increases your risk because now you're swinging deep. Okay, but to get daily as an intraday trader, you want to start your trade quickly in the day, 15 minutes and 1 hour at the best range to start your setup. But to confirm, so this is what I am doing now as a trader. I take my trades, I do my analysis on the 1 hour. Okay, I trade from 15 minutes when I see structure. Then when it confirms 1 hour, I also trade again. Then when it confirms 4 hour, I also trade again. Do you understand what I'm saying? So between now and the end of the year, I'm going to document. So I'm not doing back testing. I'm using my trading tool front test. At the end of the day, I'll see data of all my trades and I'll say, oh, next year, I think I got more on 4 hours. I cannot stay on 4 hours. That nobody taught me. I taught myself through my data. Does that make sense? Does that make sense, everyone? So you guys go practice. I'll see you guys on Tuesday. Okay, this is deep, this is rich. If you go over this video again, you find how rich it is. Don't ignore the components. So I didn't just give you 4, I gave you some added tips to buttress your trade. And if you do not understand range very well, there was something I clarified on range on our Tuesday session. If you missed it, go rewatch it. Some of you knew range, but you couldn't differentiate between a buy side liquidity range and a sell side liquidity range. It was different from the first video I did on range. That's just to show you the concept of range. But and I differentiated a buy side liquidity range and a sell side liquidity range on Tuesday. So if you missed on Tuesday session, I think I've sent it. I think I sent it on the session. So if I'm the one to send it, maybe after the session, I'll send it. Okay. Does that make sense? So with that being said, it's been a beautiful, I sent it, right? God. So you guys, go watch it. It will bring the complete puzzle to play. I know you guys have fun today. It's been a wonderful session. I'll see you guys on Tuesday. Man, I got another play to run. Okay, there's a team of other people that are waiting for me for another session. Walk. Guys, you guys take care. But I'm super excited. It's like you guys were glued to the screen. This is only what strategy can do. Everybody loves strategy. 25 people never dropped.